Today's market action told us a very clear story. At the open, we saw that all three major US indices were actually trading higher, but as the market progressed, the rally did not last, and by the close, all three of them had turned negative. So in today's video, I'm going to break down what caused the reversal, including escalating tensions in the US-Iran, the latest updates, and what are the implications now that oil has moved above $100. We also look ahead to next week, where several major catalysts could determine where the market will go next. So to understand what really happened, let's start with how the market traded during the session. Now, we initially started the market day yesterday on a high. Market was actually green, but throughout the day, this optimism failed to last, and we actually went down and we closed the day below the support of 6630 right over here. And as you can see right now, we are below this 50 EMA line, which shows that the market has really formed that as a near-term resistance. And when we zoom out to look at the daily chart, we can see that selling pressure gradually intensified during the session, and by close, all of the indices closed negative. And from technical perspective, we are seeing some continued weakness, because today's daily candle, we can see that it actually formed a bearish structure with a long upper shadow, which means that the market actually attempted to move higher but was pushed back down by sellers. And more importantly, this is the second consecutive large red candle, suggesting to us that this selling momentum might not have been exhausted yet. Now we have already lost that support, and right now the next key support that we will have to hold is this 6600 region. If we fail to hold that by next week, prepare for more downside to come. Now, and the main culprit is the escalating geopolitical tensions. It has just entered its 14th day and it is not easing. Over the past few videos, I know that I've been constantly talking about this, but this situation is evolving, and I think that every one of us should be kept updated of what is happening, so we might have an idea of how long this might last, or will it end anytime soon. So you can see the latest info is we get Tehran explosion, Israel has been striking, and there was also a crash of the US aircraft. Now, this was the biggest news that came right after the market closed on Friday. In fact, Trump has this tendency and this habit to release the biggest news right after the market closed. In fact, when US struck Iran, it was also announced right after a Friday market close. So what is the news is that the US has heavily bombed military targets on Iran's oil hub at the Kharg island, and the US Navy will soon begin escorting ships through the Strait of Hormuz soon. Now, just for context, this Kharg island actually has 90% of Iran's oil export passing through here. So this is a big hit to their oil industry. And Iran then raised the stakes again by saying that any strikes on its energy infrastructure would trigger retaliation against facilities of oil companies cooperating within the US in the region. So this has become even worse, right? As Iran, if they retaliate, we don't know what they might do. As we saw in the past few news, they are already at the US West Coast. The FBI have received reports of it, and it seems like they will not back down without a fight. And at the same time, Trump also warned that the US could carry out even heavier airstrikes next week, while the Pentagon is deploying additional Marines and warships to the region. Right, so this signals that the conflict may persist longer and potentially widen, which increase uncertainty across global markets. And another news is that the US Embassy in Baghdad was hit in a missile attack on Saturday. Now, this again increased the perception that tensions across the region will continue escalating, and this is another layer of uncertainty as more bases gets attacked on both the Iran and US side. This is not going to look good. And we are seeing that oil prices reacting to all of this news. Crude oil prices is now back above $100, and this acts like a psychological threshold, because now it is at the triple digits, and this triple digits is now like this support base, and people will start treating this as noise and start asking, will this last? Will it fit into inflation? Will it eat into margins? And will it affect policies all over again? And in this case, this oil move was not driven by just a generic fear premium. It was driven by the market deciding that this disruption is still real and is still unresolved, and it might actually be getting worse. And interestingly, we did have some inflation data that came out yesterday, which was the PCE data. And it was slightly encouraging, where the PCE data came in at 2.8%. Core PC was at 3.1%, which was a bit lower than expected. But as we saw, the market actually largely ignored this data. Geopolitical risk, US and Iran is the main headline. And these figures do not yet also reflect the recent surge in oil prices caused by what we are seeing now. Now, what are the market looking at? The market are now focused on future inflation risk, especially if energy costs continue rising. But something interesting, something concerning as well is that the fourth quarter GDP growth was actually revised down to just 0.7%, as you can see over here. And this shows weaker momentum than previously expected. So this creates another difficult environment once again. GDP is slowing down, we have inflation increasing, and unemployment is also slightly creeping up. And the worries of stagflation has just become clearer, and this historically has been a very challenging backdrop for equities, and I do hope that we don't go there. Now, next week could be particularly volatile because we have several major events which are approaching simultaneously. Now, the first one is not related to the war, but it's actually Nvidia's GTC conference for AI tech. Now, this could influence the AI sector depending on what Jensen Huang says. And this might give a little bit of relief for the market, knowing that AI is still the driver in the long term. Now, second is of course the Federal Reserve meeting and guidance, which is happening on Wednesday. This is where they will decide if they are going to cut rates or not. And right now, everyone knows that the March rate cut is impossible. But the key question is what Jerome Powell will say. How will he be feeling about the inflation going up because of oil? That will be the main topic, as well as him thinking about how employment will be ahead. So this could force the whole market to remain cautious, to remain a bit more, taking more risk off the table, or what he said could actually add more risk on the table. And last but not least, this Friday on the 20th of March, we will have this thing called a triple witching option. So this is where stocks, index, futures, and options all expire simultaneously, which often will increase market volatility. Volatility is still very high. In fact, it is higher than the day before as we saw the S&P erase gains. And we are actually approaching this resistance area now, but this has not been factored in of what Trump just announced about Kharg Island. So that is a big event, and we will actually see the impact of it on futures on Sunday. Now, interestingly, when we see what happens on Sunday over the past 2 Mondays, futures was incredibly red because, as we know, Trump actually announced some news on after the market closed. So the market first reaction will be on the futures. But interestingly, what you notice is that on Monday, even though futures was red, when the market opened, it actually turned green as well. So this was on Monday that we saw, and previously on even the week before, we saw the same thing happening. But throughout the following days, Tuesday, Wednesday, Thursday, the market gave back the gains that it had on Monday as well. And just quickly looking at Bitcoin again, once again, we can see that this 72,000 line, close to 73,000, proved to be a very strong resistance area. It tested the same levels once again, and then it put back all the way back down to 70k. So we're still sitting within that range. I do think that we will still continue to move within these two range that we see right over here, with this support at $65,000 until we see more clarity on the geopolitical tensions. Do expect Bitcoin to still trend within range and not still hold this resistance area of 73,000. The key question now is whether this will remain an oil scarce or become a true macro regime shift. We can see that the US is still continuously bombing Iran's oil facilities, and Iran is still fighting back very hard. Despite what we saw, both sides being exhausted, both sides spending so much, but there's still no signs of both sides taking a de-escalation stance. So if Hormuz continues to stay disrupted, even though with the emergency release of oil reserve, that might not be enough because that's only going to last a few weeks, and oil will continue to be treated as the lead asset, and inflation expectations as a sign of how the market will move and how long the uncertainty will preserve. And in that scenario, people will keep questioning on how much easing the Federal Reserve can actually do, even if we see inflation data growing slowly. So this is something that next Wednesday, what Powell will say will impact the markets. Historically, he usually will not say so deep, but every single word he says will play a part. But the good news is, if we ever do see shipping conditions improve materially and the energy infrastructure threat cools, we could see this repricing reverse very, very strongly, because a lot of the day's damage did not come from a fundamental decrease of a companies, but it was this market suddenly upgrading the inflation risk. So for next week, the most important thing to watch are the three things that we share, and of course futures on Sunday, but we'll see how the market opens right on Monday as well. That's all I have for you for today's video. If you do enjoy such content, be sure to hit that like and subscribe button. It would really help me to create more of such content for you. Thank you, and I'll see you in the next one.